Hey guys, TommyBryson here, and the weirdest thing ever is whenever you see words on the news or on Google or on YouTube every single day, but you don't know what the heck people are talking about, especially when it comes to investing. I remember, for example, looking at Yahoo Finance, and for example, the S&P 500, the Nasdaq, the Dow Jones, and saying like, oh my gosh, it's down. Is that good? Is that bad? What does it mean exactly? And why should I even care in the first place? And that's why today I'm going to break down exactly what the Dow Jones is, what the S&P 500 actually is, and on top of that, also what the Nasdaq is and what they actually track and what they actually stand for and why you should care about it when it comes to your investments. Now, by the way, guys, if you guys are new here, I post videos every single day, so you should also subscribe and hit the bell so you're notified. On top of that, also destroy the like button. Now, the very first thing I want to break down, guys, is basically, Tommy, what exactly is an index? Now, in terms, here's exactly what it means here. An index is just a measurement of performance to help you track exactly the ups and downs in whatever you're actually tracking out there. For example, if I have a kid, which I don't just yet, but let's just have a kid, and I want to see exactly, well, where is the best place to move to then put my kid in that school district for free and get him a very good education, right? The answer is I can look at the index of the school district in that zone right there, and they basically just look at, for example, the schools, the test performances, and the test score to see exactly what's the overall index in that entire district to see exactly what the performance is of those schools in that district. That is all it is, okay? So basically, an index helps you track the good and also the bad of whatever you're actually looking for, okay? That is all it is. Very simple, okay? Now, the first thing I want to break down is most likely one of the most popular words in the stock market, and that's basically the Dow Jones, okay? The Dow Jones is up. The Dow Jones is down. Are you worried yet? Now, by the way, if you guys don't know where the Dow Jones actually came from, it was actually made around 1894, if I'm not mistaken here. Around 1894 it was created by Charles Dow and also Edward Jones. They basically created it together, and that's why it's called Dow Jones. Super creative, I know. It took both their last names, put it together, and now we call it the Dow Jones. Now, the Dow Jones is basically an index that tries to track exactly the overall performance of the entire market. Now, how exactly do they do this? Basically, by having the 30 largest companies in the US, okay, in that entire index, and that tells them exactly how the entire stock market is actually doing. Now, by the way, there are over 1,000 companies in the US that are actually listed in the stock market. And you might be asking me, Tommy, well, how exactly does 30 companies track the entire stock market? Well, the answer is this only works because something called the 80-20 rule. Because basically, if you guys know anything about finance and also economics, basically says, for example, that 80% of whatever you actually get is accounted for 20% of your efforts. So for example, those 30 companies that are very large, well, they account for the overall market. And that's why by tracking just that entire sample size of 30, well, in reality, it gives them a perspective of the entire market. So you don't have to basically own the entire market, but just by owning the largest companies out there, you basically get to know exactly what the entire market is basically going to do. How cool is that, okay? So whenever you hear, for example, hey, the Dow Jones is down, basically means, for example, the entire stock market is down based on this index right here of the Dow Jones created by Charles Dow and Edward Jones back in 1894. By the way, in 1894, I was around negative 103 years old. I was about to be born, but my great-great-grandmother had to be born first, and then so on and so on. But yeah, the stock market has been here for a very long time, by the way, okay? Just want to make that clear. By the way, for all of you guys probably wondering, Tommy, but what if I want to buy an ETF or an index fund that actually does this? Can I actually go out there and actually buy it? The answer is yes. So for example, if you go on Google right now, which I will go just to show you guys exactly here, just go on Google and type in, for example, total stock market ETF, okay? And here it is right here, by the way, with Vanguard. I already searched it up for you guys, okay? And the entire symbol is actually VTI. That's an ETF. You can actually buy it on the stock market today if you actually wanted to with Robinhood and When Finance or whatever app you actually have out there. So just look up VTI. Now, by the way, if you want to buy the mutual fund, well, just click here, and here's the mutual fund right here, and the symbol is VTSA X. And here it is right here. And this contains basically well over, if I'm not mistaken here, well over 3,566 stocks to give you the entire total performance of the entire stock market every single year. While the Dow only has the 30 largest companies, by investing into this, you basically own the entire market, and that way you get the overall return of the entire market. However, if you do want to, you can buy an ETF that resembles the Dow Jones if you want to, but you have to look for it out there. But this one's also good enough, and it's basically the total stock market ETF by Vanguard. I actually like it a lot. Now, number 2 is basically my favorite, and it's basically the S&P 500, which accounts for the largest 500 companies in the entire US stock market. And by the way, those 500 companies account for basically almost the entire growth of the entire US economy in a way. Only around 80% of it or so, okay? And again, that's because of the 80-20 rule, the Pareto principle when it comes to economy. Now, by the way, if you guys want to learn more about that, I recommend this book right here. Read it. It's very exciting. And by the way, I actually invest into the S&P 500 by buying the ETF that was actually made by Vanguard, and it's called VOO. You can find it anywhere on Robinhood and when Finance, anywhere you actually want to go out there and find it. But again, the S&P 500, which stands for the Standards & Poor's, basically contains the top largest 500 companies in the entire US stock market. And also, as you guys probably already guessed here, you can actually find companies in both the S&P 500 and also the Dow Jones. And by the way, I want to show you guys this right here. Here are the top 30 largest companies in the US. So basically, the entire Dow Jones index, okay? And by the way, this is actually from 2017. So keep in mind, some companies get kicked out and some companies are new and actually get put in, okay? So this entire article is probably not that accurate. But here we have, for example, Apple, Google, Microsoft, Amazon, Facebook, Berkshire Hathaway, Alibaba Group, Johnson & Johnson, also Chase, and also ExxonMobil, okay? And by the way, keep in mind, guys, whenever you invest into large companies, you cannot expect any crazy growth actually taking place because basically the companies are way too large to experience any crazy amounts of growth, okay? So just keep that in mind, okay? Now let's move on to number 3 here, okay? So far we have, hey, the Dow Jones, the 30 largest companies in the US, and also the S&P 500, the 500 largest companies in the US, but now let's talk about the Nasdaq, okay? What exactly is a Nasdaq? Now, in the Nasdaq, there are around 3,300 different companies listed in the exchange that are actually tracked in the Nasdaq index, okay? And by the way, okay, in the Nasdaq, they have a lot more tech companies. So usually, people like to use the Nasdaq to basically account for the entire tech industry and how it's actually going and how it's actually moving. Is it up? Is it down? So overall, guys, okay, so far, the S&P, the Dow Jones, or for example, the Nasdaq, are just several indexes to contain a lot of different stocks that would track whatever they're trying to track out there. The Nasdaq, a lot more stocks, so it gives you a more broad perspective. The S&P 500 gives you 500 or the largest stocks, so it gives you a better perspective than I would say the Dow Jones, which only has around the 30 largest companies in the US, okay? And by the way, just so you guys know, okay, just like the Forbes list, people get put on every single year and people come off of it every single year also. So for example, you might have companies that every year they're on it. Apple, pretty good company. Amazon, Google, pretty good company. Microsoft, pretty good company. But some companies come on the list and also get removed from the list as soon as they stop performing to actually be on the entire index. So keep that in mind. And by the way, one more tip is this, okay? If you guys want to invest, the best way to do it is basically go on the Nasdaq, or for example, the total stock market indexes, and then look at all those companies, read about all of them, and then basically find yourself some bargains to actually go out there and invest into. And that's actually what I'm working on right now also. So if you want to find companies, go on the total market, look for companies right there, and look for some bargains to actually go ahead and invest into. That is all I can tell you. And by the way, there are other indexes, for example, the Russell 2000, or for example, the Nasdaq 100, or for example, the I think it's called the Wilshire 5,000, which contains a lot of stocks, over 5,000, to give you the entire total stock market perspective. There are a lot of indexes out there, but in reality, when it comes to investing, all that matters is basically what you actually invest into for the long term. And markets will go up, will go down in the short term. You can't predict it, and volatility is not risk either. So I highly recommend go out there and read some books on investments, and don't just study, oh my gosh, the Nasdaq, oh my gosh, the Dow Jones, oh my gosh, the S&P 500 is up, it's down 10 points, oh my god, you know what I mean? It's just indexes, helps to track things, pretty good too, but aside from that, it should not tell you when to invest or what to invest into either. So just keep that in mind. And overall, guys, I'll see you guys next time. Thanks for watching. If you learned something here, well, like this video and comment down below and let me know. And as always, if you're new here, subscribe and hit the bell so you're notified when I'm posting a video every single day. And also, if you want to text me or talk to me, hit me up on Patreon, link down below, or for example, send me a DM on Instagram at TommyBryson. And if you want to watch the video on the basics of investing, watch this video right here. So, see you guys tomorrow. Thanks for watching, and as always, peace.